Hey there, business owners and self-starters. If you're self-employed or running a business, you've probably heard about quarterly taxes. But who needs to pay them? And how do you figure out what you owe? Don't worry, I'll explain everything you need to know. First up, what are quarterly taxes? They are estimated payments made 4 times a year to cover income not subject to withholding, like freelance work, business profits, or investment earnings. The goal is to pay taxes throughout the year instead of facing a huge bill in April. So, who needs to pay quarterly taxes? Let's break it down. 1. Self-employed individuals. If you're a freelancer, contractor, or gig worker, this applies to you. 2. Small business owners. Running a sole proprietorship, LLC, or partnership. You're likely required to pay. 3. Investors and landlords. Significant income from investments or rental properties also counts. 4. Corporations. If your corporation expects to owe $500 or more in annual taxes, you're on the list too. Now let's talk numbers. How do you calculate your quarterly payments? Here's the rule. The IRS expects you to pay at least 90% of your current year's tax liability or 100% of last year's tax liability, whichever is smaller, to avoid penalties. For example, if you owed $20,000 in taxes last year, aim to pay $5,000 per quarter, $20,000 for. If you estimate you'll owe more this year, adjust accordingly. If you're just starting out, it can feel tricky. Use IRS Form 1040-ES to estimate your income and deductions for the year. Let's say you project $80,000 in profit and fall into a 25% tax bracket. Multiply $80,000 x 0.25 equals $20,000 total taxes owed. Divide by 4 and you get $5,000 per quarter. Quarterly taxes are due 4 times a year. April 15th, June 15th, September 15th, January 15th of the next year. Mark your calendar, late payments mean penalties. To sum up, if you expect to owe $1,000 or more in taxes after credits and withholding, quarterly payments are a must. Calculate based on last year's tax bill or estimate this year's income. It's all about staying ahead and avoiding surprises at tax time. If you found this helpful, hit like and subscribe for more tips to grow your business and master your finances.